Radio Network. What's happening on the grain markets? Our first matter of interest today. Dan OBrien with us once more, grain market economist, K-State Research and Extension, along with us from his office in Colby, Northwest Kansas. First, though, Dan, let's reflect back on something you were involved with yesterday. It was another webinar out of K-State Agricultural Economics on the Russia-Ukraine grain situation. Of course, in the throes of the battle over there in that country. And you were joined by Antonina Boryaka once more to talk about what's going on there. What were some of the high points of that discussion, and what clarity do we have now on the grain export circumstances in Ukraine or coming out of Ukraine?
Well, Antonina has such good information in country on what areas are affected by the hostilities over there and what areas are not, and how that coordinates with areas of production, the ability to ship grain, access to the ports, and all of that. And also, she's discussed the availability of fuel, which is surprisingly high. They talked about like 80% of the farmers had access to fuel, but it cost $10 a gallon. So that's and they had long lines trying to get to it. So that's the downside of it. We discussed the issues of grain storage. I think, Eric, that's probably, in my thinking, the reason as to why we're hearing so much discussion internationally about setting up grain shipment corridors and figuring out. Now, Turkey is trying to broker a deal to be able to move grain out and going through neighboring countries as opposed to going through the Black Sea, which is blocked up with on a military basis. So they built up stocks over there from grain that they haven't been able to move from the last harvest, and now it's not too many months, especially for wheat. They'll start their wheat harvest, winter wheat harvest, about July 1st, and a little bit later than us, a couple, 2 or 3 weeks in the southern Kansas. So here they've got grains been sitting at the ports, been sitting elsewhere, hasn't been moving, and now they got another crop coming on. So that's a big issue, and I think that you're dealing with such a moving target of issues. Again, mined ports, mined fields in some cases, fields that have to be cleared, cratered areas. So for sure, the area along the coast of the Black Sea, except over into down in the boot of that country, is southern boot, Odessa, et cetera, that's still controlled by Ukraine. But Russia controls a fair amount of that, of I guess the bordering lands along the Black Sea and up around the top of that country. And it's interesting that that's not really where most of the agricultural activity is happening. Most of it's in the center and a little bit more to the west. But still, it's you just got something that thankfully we don't have to deal with here, and that's just the physical disruption of a military conflict going on that stops up the availability of key inputs such as fuel, fertilizer being affected. And who sells most of the fertilizer out of that part of the country? Russia. So are you going to be able to get, that's probably not acceptable. So you've got all those issues. So pardon me. Anyway, the point is that in fact, the key issue that Antonina started talking about today was the ability that Ukraine had to move grain out. So that seems to be at risk. It's noteworthy that in the last week or so, there have been headlines from a UN Security Council group talking about the limitations on world wheat supplies, in particular grain supplies overall, coming about as a result of the Ukraine conflict, and now the worries about adequacy of food supplies. I think gets coupled with high prices, and so a lot of players talking about this and trying to broker deals, figure out some way gain access to what Ukraine has sitting in bins and will have coming, just to make sure that different countries in the world aren't really stressed. I think the situations that I'm most concerned about is that would be those of countries that with high prices have spent a lot of money out of their treasuries or borrowed money to be able to get adequate food supplies for their populations. And now, given the economic challenges we have, they're running out of funds to do that. So I'm not sure where the UN gets involved in all that, but surely between U.S. PL, what we used to call PL 480 funds, I think it's still program still around, and elsewhere to find out where the areas of need are and get grain to those areas in an efficient, effective manner is really important right now.
Well, the multiple footprints that the Russia-Ukraine situation is leaving on the grain trades are very evident, and world food security, as you say, along with that. Dan, let's directly look at the markets here. Wheat, are we seeing some what we would term in normal years pre-harvest weakness creeping into that trade right now?
You're seeing between corn, soybeans, and wheat. Wheat has over the last 1 or 2 weeks has come down probably the most. Where it's come down from is pretty important. You'd gotten up within the last 1.5, 2 weeks, gotten to highs about 1375. And we had been trading at highs of about 1260 or so until this recent run up. Well, now we've ran up to what we talked about 1275, have come down now, closed yesterday at 1228, and are looking at where we just came from, 1475. But it wasn't that long ago where the 1228 that we're sitting at would have been near the top of the trading range. So that just shows the inflation that in that market. So I think that there's been some weakness off of those extreme highs. Whatever we get for hard red winter wheat harvest is coming soon. So that you could argue that will help, even though you go look at Texas, Oklahoma, parts of Kansas with our Kansas wheat tour, we're down a little bit. You do see still issues up in the Dakotas in North America and on into Canada. So the Dakotas on in Canada, Minnesota, elsewhere, of just such excessive moisture that they're having a difficult time getting the spring wheat crop in. And we're talking about difficult time. We're not just saying that they're 5, 10 or 20, 15% slow. They're like 50 or 60% behind pace. So you've got issues like that if they and we up there are approaching insurance dates. That's how tough the situation is. And you get that far north, you have hard freeze dates on the end if you start planting that stuff too late. So interesting time that gosh, when the world would have really benefited from a large North American wheat crop, we're struggling with all these problems. Seems like soft red's doing well, but that's about the only one. So you got that, and cash prices are now below in most locations, except on yesterday, except in Salina and Topeka and Hutchinson. You go to Colby and Garden City and Columbus, you're closer to 1160, 1140, 1180 than you are 12 to 1210 where the export numbers are. It's been this ongoing conundrum for wheat in that with all that's going on in the world and the likelihood that we would hope to see pretty strong U.S. wheat exports, we just haven't seen it. And it just brings up the question of when other buyers might when they might run out of other options and come to the U.S. shores. That's even exacerbated here of late. India, which was going to take advantage of this situation with what they thought were coming with a great crop, has had read where they've had such heat of late that they, instead of being an exporter, they're about down to break even and may even have to import a little bit. So you run into that type of situation in the world market. So I guess overall the wheat situation, we've come down off of tremendous highs, are still very strongly supported by a very, very tight world market. And we'll continue to move forward. And I guess someday when the world runs out of other options and has to come buying wheat from the US, then we'll see where the markets go from there.
Quick summary here to close out on the row crop markets, corn and soybeans. Planting progress for both, not unimpeded, but has moved along fairly well, hasn't it?
Yep. Yeah. Price wise, both of those futures, both the July futures markets for both of those are basically in sideways channels, and they bounce around within that. We had a great export week for corn and for grain sorghum for the week ending the May 19th. Just so for soybeans. Planting progress, really pretty good, except in the Dakotas. So we're getting a crop planted. It's got a lot of places got pretty good subsoil moisture, and so that's one of the issues that's probably leading to some weakness in corn futures. Dees closed yesterday at 718, had been sharply higher than that. Again, more like 20, 30 cents higher than that here of late. So you're seeing some of that weakness. Even with all that, soybeans gangbusters, running to the high side. So go figure. So we have great exports for corn, and the price is kind of sideways, a little bit lower. We have sideways to poor exports for soybeans. We're running strong. So just is as it is.
Right. And just as a comment here at the end, the volatility will remain day by day. Who knows? It's a pretty wild ride.
On the world level, we're so tight that it brings about knee jerk, as you say, volatile reactions. And that until we get somewhere out there this summer, we're just assured of a great U.S. corn crop, a great U.S. soybean crop. It seems that this is how we'll keep bouncing.
All right. Well, Dan has actually more than one set of notes on agmanager.info this week. His regular overview of the grain markets, plus his comments presented at that Russia-Ukraine webinar yesterday. Again, all of that can be found for your review at agmanager.info. And a good holiday weekend to you, Dan. Next Friday, we'll talk once more.
You too, Eric. Take care.
Dan OBrien, grain market economist, K-State Research and Extension. Agriculture Today returns in a moment on the K-State Radio Network.